So is inflation that bad? So the Fed came out, and the way that they measure inflation, which I think is complete garbage, but let's just do it the way the government numbers are. They are stating that inflation is 5%. Now, the stuff I buy over the last year has definitely gone up more than 5%. But energy, housing, food, those aren't in the inflation index. Don't mean to be cynical about it. I just find it humorous and hilarious. So, 5% rate of inflation is pretty serious and getting pretty serious because once inflation gets out of the bottle, if you will, it's kind of like a genie. Like once it's out of the bottle, it's out of the bottle. And the only way to put the genie back in the bottle is to get ahead of inflation, meaning you've got to seriously pump the interest rates way ahead of it. Example of this, 1980, 1981, Ronald Reagan and Paul Volcker. Reagan gets elected after Carter, and he's like, hey, inflation is out of control. We need to get ahead of it. They brought the interest rates all the way up to 18%. Imagine what happens to the housing market if interest rates go to 5%. Meaning they keep up with the CPI. They keep up with the inflation rate, which it would be lagging, right? Because the real cost of goods and services, let's say, is going up 10%. The government's saying, well, it's going up 5%. Okay, fine, let's use your numbers. But the interest rates to get ahead of that 10% really becoming 15, really becoming 20%, and the CPI going to 6% or 7%, the American public is going to go, hey, are you guys going to do anything about this or like not? Because the government can't really show that, yes, we're going to let this thing go into hyperinflation. Now, they might let this thing go into hyperinflation, but let's just assume that they are somewhat responsible. I don't see any responsibility at the level, at the Federal Reserve level. But let's just assume that for a moment, people were quite rational and they didn't want to completely implode the U.S. financial system. You got to jack the interest rates up. Like at some point or another, you got to jack the interest rates up. Meaning interest rates are going up. Interest rates go up, housing goes down. However, with that stated, I just don't think it's possible. I tend to agree with the Fed, and I hate to admit that I agree with the Fed, but I think that things are transitory. Meaning, I just bought these gloves. I buy these gloves all the time. I go through gloves all the time. I work in and out of the truck like 1 or 2 days a week, so, I like to have gloves. I'm the glove guy. I like to keep my hands nice and pretty. I always have gloves, give them to my guys. They don't wear them, but I'm like, hey, I'm gonna wear them. I go through gloves all the time. They get dirty, I throw them out. So what I did the other day is I would go to the store and they're $2.89 a bag, and I was like, bought 5 of them. Then I go into the store a week later and they're $5 on clearance, and I'm like, man, I should have bought like 20 packs. But my point there is like, I'm good on gloves for like the next year and a half with like 5 packs of gloves. Like I'm good. So I'm not buying any more gloves. The reason I bought those gloves is I thought inflation is going to be higher, and I was right. They went from $2.99 or $2.89, which is kind of a fluke. I've never bought them that cheap before, to $5, and they're on their way up. So I bought them, so I'm good. I'm out of the glove market for the moment. I just think that inventories were low before the pandemic, and so now, people are like, well, we need to pump up our inventories, plus things are going up in price, so let's buy it. There's been several things that I'm like, you know what, I'm going to buy it. Toothpaste, I'm going to buy it. I'm going to use it for the next year or two. I'm going to use it. I'm going to buy it. Like body soap, we're going to buy it. Toilet paper, we're going to buy it. Like things like that I know that I can stock at my house, I'm going to buy it. And so I just think that might be happening at a larger level. But at a bigger picture, the 3,000 or 10,000 foot level, the forces of deflation are so heavy right now that I don't see how they truly get inflation unless they do UBI, which is Universal Basic Income, which is AK, I'm going to print money up and I'm going to send it to you in the form of stimmy checks. They could get it if they do that. But if they don't do that, baby boomers have reached peak spending. The youngest baby boomer at the moment is like 61 years old. Peak spending occurs at 47 years old. So they're 61 years old. They feel like they're getting wealthier and wealthier because their stock portfolios are going up and up and up. I would argue that they're getting poorer because the goods and services that you can purchase are actually becoming less and less. Less goods and services are being produced. So on net, we're becoming a little bit poorer every single quarter. But nonetheless, let's assume that a stock crash happens because we're in an everything bubble. all of a sudden those baby boomers go from having a net worth of $2 million to having a net worth of $1 million. There's nowhere to get money to work for you risk-free, meaning an interest rate. There's nowhere to put your money in the bank, let's say, and have it FDIC insured and get a 5% or 6% or 10% interest rate like you could have in the 90s and just live off that $1 million and just, live on $30,000 a year and let it build a little bit. You can't do that. So you've got to be in the stock market. What happens when the stock market dumps? And all of a sudden you go from thinking you're worth $2 million as a boomer to being worth $1 million. And then let's assume that the millennials don't want your 3,000 or 4,000 square foot house. Who do you sell it to? And so now you're getting older, you need to downsize, your income is shrinking, your stock portfolio is shrinking, and your asset being your house is going down in value. At the same time, inflation at the beginning was getting hot, and because the Fed was out of control, so they were allowing inflation to get hot, and all of a sudden they go, you know what, we're going to have to raise the interest rates. Like, this is getting insane. Well, what happens at that point? Epic deflation. What happens when the guys move out of the city and they're making $100,000 a year as a city slicker job, and all of a sudden they can do it work remote, and they're like making $100,000 a year, and they're living like, I don't know, like out in Buffalo or something like that, where it's a lot cheaper. You don't have to live in Manhattan. Well, what then? As an employer, do I still have to pay you $100,000 a year? I mean, yeah, it might be pretty unpopular to start paying you $50,000 or $60,000 a year, but like eventually when people leave the firm, or I just decide to, we're just going to cut wages. Wages are hard to cut. Keynes said, John Maynard Keynes, famous economist, he said, wages are sticky, and they are sticky. It's hard to say, hey man, you're making $30 an hour and you're going to go down to $20 an hour. It's hard for people to swallow that, but it's easy to hire in new help at $20 an hour if your existing help is $30 an hour. It's no problem. So what I'm saying is that the forces of deflation, either work from home, work remote, boomers cutting peak spending have already arrived at peak spending. People like my parents who have 2 cars now, but over the next 10 years, they're going to have 1 car. And probably the next time they buy a car and they're in their 60s, it'll probably be one of the last cars they buy. They might buy 1 or 2 more cars. They're done buying cars. Out of all the dozens of cars they've owned and out of all the houses they've owned, they pretty much just bought their last one. They just bought their last one. Maybe they'll buy 1 more. But they've downsized. I mean, they are where they're at. The next home for them is probably a nursing home in the next 15, 20, 25 years, whenever that occurs. So what I'm saying is that I think that we have inflation, that it's somewhat transitory. I hate to agree with the Fed, but I think it's somewhat transitory. And unless they print more money, and give it directly to the people, I don't see how they actually can inflate this if the banks are not willing to lend. And why would the banks lend at 0% interest rates or 2 or 3% interest rates when the CPI is at 5%? They won't lend. So that's deflationary. So what I'm saying is that it looks like it's inflationary. All the news stories are saying, oh, there's inflation everywhere. And yeah, maybe. But all the forces, the demographics, the work from home, all the forces are deflationary in nature. So it's inflation until it's not, and then it's epic deflation. I mean, epic deflation. Unless they take money directly to the people and they do some sort of UBI, and they probably do a digital currency to get people to sign up for their UBI. And it's just like, hey, we're going to send you $2,000 a month for a UBI. Well, then will people work as much? I don't know. So then you could get real inflation because you have less goods and services being produced and more units of currency chasing those remaining goods and services. Then you got inflation. But as things sit now with the demographics and the work from home and the culture shift, I don't see it happening. I just don't see it happening. And so I do see people like myself stocking up on the items that they know they're going to need, the consumables, and then going, I'm not buying anything out. I'm not buying more gloves for another 2 years. I'm good on gloves. So there's 10 pack in there. I use them like once a week. I go through gloves like once a month. Yeah, I'm good. I'm good on gloves for like 2.5 years. I would have bought more. I just didn't think I could store them. And so I think that that's happening at large. And then it's like, well, those glove prices might go to $10, but at some point they're going to go down to under $2 if nobody's buying any gloves. And that's, a theoretical example, but I see it even bigger with real estate, where people now are moving out of the city. Same thing. They've got big city salaries. So they're going into these smaller home communities and they're going like, oh, I'll pay 20, 30% over asking because screw it. It's cheap compared to the city. But then when the wages come down, and the interest rates go up for those homes, and the mass migration has already happened, like 3 or 4 years from now, if you have, or you're going to move out of a city, you've already done it at that point in time. There's a few people that are probably still on the fence at this point in time. But in time, it's just like, if you're going to do it, you've already done it. And there's nothing else to do. It's like lumber. And so I think lumber will probably be the biggest telling leading indicator. If lumber dumps, we can basically say everything else is going to be the exact same thing. So at this point in time, I think my key index that I would be watching for would be the price of lumber, potentially the price of copper. Other things like the food markets, like corn and soy and other options, there's ways to manipulate those markets. They can pay farmers to not produce as much. They can shut down, they can have cyber attacks all the time and shut down, corn growing. I don't know. They can shut down pipelines whenever they want. So like those markets, they can keep propped up. But everything that I see out there is just a deflationary tank. And yeah, they can print currency units, but if they don't get into circulation, if they're not loaned into circulation, if people aren't taking on loans and expanding, and expanding their operations, the forces are deflationary in nature, and the demographics are certainly deflationary, and the work from home and remote working is definitely deflationary. And that's before you add in a global effect and you stop hiring that guy that was living in Manhattan and moved to Buffalo, and all of a sudden you can hire somebody that wants to go van life it and has a doctorate in history, can write your papers for you, no problem, or whatever it is that you're looking to do, and they need less than 50 grand a year. They need 25 or 30 grand a year. And then if you go to the really educated Guatemalan or Philippine or whoever, now you've got global competition where you can pay them $15,000 or $20,000 a year, and to them it's like living on $100,000 a year over in Guatemala or Philippines or wherever they are. So that's deflationary. So everything out there I see is deflationary. The only way they could do this is if they purposely choose the option of hyperinflation, which is print money, give it directly to the people. And at that point, yes, it's epic inflation. But until then, I think it's epic deflation. Thanks for watching, guys. Peace.